Hey, everybody. Welcome to the show today. It is Monday, June 24th, and we are coming into the last trading week of June and a big week we have in store for you. We're going to jump right in. We're going to first talk about our earnings related trade from last week, which was on Kroger. We're going to touch on just a couple of headlines before we move on to the market update. We'll tell you when we get to the market update. I've got my targets that I've set for the upcoming months and the into the fall as far as price targets. So tradable information there. We're going to look ahead at earnings that are coming up this week, and then a particular stock that we're going to look at that everybody is familiar with today. So let's jump right in and talk about Kroger. Okay, that was our trade last week. An interesting thing is when you do these types of trades, and again, we were expecting a breakout on Kroger, but there is a little system that we use where we analyze what the stock is going to do going into earnings and then through earnings. While we were expected to hold this through the earnings announcement, the day before earnings, we had a double-digit return on Kroger, and that is from the stock not only the movement, but implied volatility rush into the options. And because of that movement, we went ahead and took those profits ahead of earnings, the earnings event. That was about a 17% return on investment just within a couple of days of holding that position. That way, we didn't need to worry about the earnings. Kroger did gap up, but not quite enough to go through the upper break even of the trade and then drop the rest of the day. So it turns out that was a good move on our part to go ahead and take the trade off pre-earnings. So we made about $135 per spread on the trade, and ended up being a good. It was $45 per spread, and then we did several contracts. So we ended up with a good result there. All right, so stay tuned. We're going to get to more earnings related events, but let's talk about headlines real quick. There's only a couple. There's a lot of noise out there, but we do have some significant events coming up this week that are newsworthy, but they don't really affect the markets and trading. Now, there are some economic events. I left those off, but the most important thing here is the rebalancing. Now, the S&P 500 rebalanced last Friday at the end of the month, or at the end of the option cycle, okay, for June. And that really affected several ETFs and the size of positions and holdings within those ETFs. This week, we have the rebalancing of the Russell 1000 and the Russell 2000. And that's a lot more companies that are going to go through rebalancing in the index, or in the ETFs, not the indexes, but the ETFs that are related to those. So you could see some pretty heavy volume, okay, but not much movement, okay. Typically, that doesn't translate. It's just lots of volume as these things go through occurrence. And then finally, earnings related. We are in the quiet period as it relates to earnings, but this doesn't mean we don't have some big names reporting. And that's what's kind of interesting about this time of year. We have a small number of companies declaring earnings, but some of those names are pretty well known, and we're going to touch on that here in just a moment. So let's get into some quick market analysis. Let's talk about where the S&P 500 is trading right now. We have a couple of quiet days, which is good. This is perfect. The market came down, as you can see here. I'll zoom in, and we are trading down to the 10-period moving average. That's what this blue line is. All right, the 10-period moving average. And with the latest rally we've had in the S&P, it's good that we pause a little bit, okay? Now, my red line or orange line here is the 21-period moving average, and you can see how the S&P 500 just traded right down to it, bounced off of it, and then made new highs. I don't really, we might break through the 10-period and trade down to the 21 again. That's not a problem. That little bit of a pullback is healthy for the markets. I do have a long-term target here. I will show you. It is 565 on the S&P 500, and that is by October 1st. All right, so you'll go out here, and we'll go up to 565 right about there, and that is why I have that target, is because that is right on that trend line. Okay, and the market's going to oscillate up and down and around. That's also a Elliott wave target for time and price. Okay, but that is my target going into October. Okay, I know that's several months away, but keep in mind that 565 level is my long-term target there. Looking at the Qs, And again, the Qs are suffering from, well, some rebalancing, okay, and some names that are now less weighted than they were, and adjustments. And we are dropping. We're trading, as you can see now, below the 10-period moving average. We'll see where we close today, but a close below that 10 period could mean a pullback to this 21 period. Now, again, that's only going to be a percent or two, not a big deal. I would like to see probably a pullback, well, really to this 465 level. But I do have a target of 500 by late July, early August on this, and that would still come into play. Okay, if we pull this back, all we're doing is falling off the trend line here. We're looking for moving average support or technical support before we then push higher. Okay, before another move higher. Moving on to small caps, we're stuck in a range with small caps here. I'll pull back so you can see more data. We're having a good day today, up about 0.5%, while the spider is down slightly and the Qs are down almost 1%. IWM is up just a little bit, but as you can see, it's fighting that 21 period moving average. Look at that, traded right up to it and fell off of it. So really for IWM, I would say if you can get any premium by selling the 190s or the 210, so sell the 190 puts and sell the 210 calls, but be sure to hedge it. That would be your play right now with IWM, is to kind of create what we call an iron condor or a condor, either one, with those strikes as your sell strikes. If there's any premium there, that might be something to consider, because this thing is stuck in a range right now. All right, now moving on to USO and oil. Okay, USO, man, it's, other than the pause on Friday that we had, look at that. We're up 1.37% today. Still strong. Demand is expected to be strong, and we are moving higher. I don't necessarily like the angle of ascent here, but I've talked about that a little bit. But right now, again, in these types of sectors, specifically commodity-related sectors, you can get these limit up moves or limit down. But in this case, a limit up move, where if you're on the short side of that, boy, you can go broke pretty darn quick. All right. So if you're looking for a play right now, oil is back in play, and it has been for now a couple of weeks as it continues to drive higher. Now, gold, interesting. With gold, it's stuck in a range as well, and really that is the trade at the moment. But a big bank just came out with a $3,000 target on gold, and I find that interesting because this latest rally that you see here, this move up was the buying of gold by sovereign wealth and sovereign nations. Okay, countries around the world hedging against various factors, and buying gold, buying silver. All right, so that's what sent this metal up, and now a big bank is out there reporting they've got a $3,000 target. Now, for me as a technical trader, I'm looking at this going, well, it's got a bit of work to do to get on that wagon. Okay, so it's really struggling with these moving averages. You can see their support and resistance bouncing back and forth. So right now the trend is sideways on gold, but just kind of keep that in mind. The trend is higher. It does have pretty significant support here at around 212. All right. And then I think 212 and above. So if you're looking for a trade, maybe sell the 212s or the 210 puts, hedge below it by buying a little further out of the money put. And that would be a pretty high probability trade given the current trend for gold. Now, silver kind of taking a pause today while gold's up at almost 0.5%. Silver has really, look at this. We were going into this wedge. We popped out of it and then fell right back in on Friday. Okay, so Thursday we popped back, we popped up nicely, did not get any follow through. We dropped back down on Friday, and today we're right here at some intermediate support. We're at the 10-period moving average, and silver's not really going anywhere. But again, I would suspect that this is, I would suspect I could just do this, right? and reset the wedge. And if price builds in there, we're going to look for a breakout one way or the other. Okay. Now moving on to bonds and interest rates. I think we have rallied up here into a pretty significant resistance area. You can see that we've been trading here for about 5 days. We might see this continue to trade sideways as rates level off. We had rates drop down a little bit. They're holding right now, waiting for economic data and some economic reports to come out. But I think then this could trade sideways for a little bit. I have really a sideways analysis on this for the next 3 weeks. Okay. In one of our publications, I put out a trade today indicating that we were looking for TLT, which is the long end of the curve, to trade sideways for about 2 to 3 weeks. And we will see if that happens. Now, on the short end of the curve, that would be SHY. We're in kind of a defined uptrend. We've broken through this little resistance area here. That was nothing significant. That means rates kind of coming down. And we are, watching what's happening between these two, meaning the long end of the curve and the short end of the curve, because that was causing the yield spread to widen. And that is one of the things the Federal Reserve looks at. Okay. So if we go and look at this yield curve, which remains inverted, you can see when these new rates started to adjust that the curve started to widen once again. Now it has leveled off. Okay. It has leveled off, but that might be just temporary. Okay. So I put up also the past 5 days. You can see rates really haven't changed for the past week. I would expect that to kind of continue. But that inverted yield curve is, of course, cause for concern. We're trading at 124 basis points to the negative. That is off slightly from the lows, around 131 basis points. But still, we'll pay close attention to this, because if we get down there beyond 150, closer to 170s, that's when we had some problems with some of the regional banks. All right. And we had Signature and Silicon Valley Bank fail when we got to about a 1.7% inverted yield spread. I would keep an eye on this, and we do right here every week. Let's take a quick look at mortgages, because they are also reacting. They've gone flat on the U.S. based average of a 30-year mortgage. You can see that we have been trading sideways now for several days. That blue line is your daily average. That's the Mortgage News Daily average rate for 30-year bonds. The gold and the gray lines are weekly numbers, so they respond a little bit, obviously slower. All right, but you can see they're pointed down, and the trend is down. We're holding right at 7% on that instrument, and that means rates. You're going to find rates, especially for new builds, down in the 5s. Okay, home builders are buying down these rates. They're offering incentives for purchases. That's because that market is slowing down a little bit. Okay, new home sales are slowing down in many markets. I know in a very popular market right now, foreclosures are going up. That's a whole different story, but that's kind of an alarming number, the number of foreclosures that were increasing, especially in some of the better markets, not hotter markets, but better, solid markets. Okay, we're seeing those numbers play out. So we'll keep an eye on, of course, interest rates and how they affect housing and car buying and all the things. Okay, we'll keep an eye on that. All right, so moving on, let's get to earnings. This is a popular topic. It's one of our favorite things to do. We trade around earnings on a regular basis almost every week, and this week is no exception. All right, we have a quiet trading week. All right, this week there's only about 90 plus companies that are declaring earnings, and for those that are most anticipated, or some of the bigger companies, that number is even less. All right, and so today was pretty quiet with just one. Tomorrow we have Carnival Cruise Lines, we have FedEx, we have on Wednesday General Mills and Paychex, Levi's. Jefferies is a big broker in the financial trading space. Okay, we have Jefferies reporting, and then on Thursday we got some big economic data coming out in the morning. Okay, so we'll watch that. But then after that, we have a Walgreens, which is always something to watch around earnings, and we have McCormick's, which is also a popular trade around earnings. Okay, the spice company, believe it or not. All right, they are something, and then Nike as well after the market close on Thursday. So there are several companies, big names that we all focus on. And even though there's only 90 plus companies declaring this week, there are still these big names which can make big moves and affect their sectors here. Okay. So what are we focused on this week? Well, we are going to be focused on FedEx. All right. Now, FedEx is a stock that tends to move around earnings. We have a trade here that is anticipating a breakout. We're finding a little premium discount here as we go into earnings, and that premium is based upon the historical moves of the stock around earnings. This trade would cost you about $1,800 to do this strangle. Okay, so be sure you use wise money management principles around it, but we're anticipating a move. On average, its historical move is around 10% or more on each earnings cycle. So if we get that kind of move here on this trade, we will have a profitable trade, and that is our expectation. Now, if you're wondering how we trade these, what types of strategies we trade around these earnings names, you can download a free copy of how we trade around earnings, and that's available to you at ewotrader.com/straddle. And I've got a free guide for you to download. It just talks about what we use as a catalyst behind trading around earnings, what types of strategies we use, and this is a good beginner's guide. Even if you're a seasoned pro, it's a good guide to get a hold of and to use as a reference as we come into earnings season, which, believe it or not, the next big earnings season is coming up in July. And guess what next week is? Start of July. So we got lots of things coming up. Be sure to join us each and every week right here. And I will talk to you next week, and we'll find out the results of our FedEx strangle. Everyone have a good trading week. I'll talk to you again next week. Take care.